Palantir Technologies has a history that sets it apart from most companies in the technology and defense sectors. From its early beginnings, Palantir demonstrated a willingness to push boundaries and challenge institutions that others would never dream of confronting. A notable example of this came in the year 2016 when the company took legal action against the United States Army. Palantir claimed that the Army violated federal law by bypassing commercial alternatives and choosing to develop its own battlefield intelligence system internally. Palantir believed its own software solutions deserved serious consideration and argued that the government had an obligation to evaluate existing private sector technologies. In the end, the courts sided with Palantir, setting a powerful legal precedent. The ruling made it clear that federal agencies must give meaningful attention to commercial technologies before attempting to build their own systems from scratch. This case was a bold move by a relatively young company and demonstrated the disruptive and daring spirit that has defined Palantir since the beginning. This determination to go against the grain is not just something the company did once. It has been a recurring theme throughout Palantir's existence. According to Brett Bracelin, an analyst from Piper Sandler, this attitude reflects what he calls Palantir's unconventional journey. He emphasized that Palantir has taken a 22-year path to reach its current position, which includes a revenue run rate approaching $4 billion and free cash flow margins of more than 40%. Bracelin points out that although the company has never followed traditional business norms, its lasting impact in the artificial intelligence space could be deeply significant. In his view, Palantir is not just another tech firm, it is a key player in shaping how artificial intelligence is used across both government and commercial domains. Bracelin has been closely observing Palantir for more than 5 years, which has allowed him to gain a deep understanding of the company's highs and lows. He tracked the company during its time as a private firm, when it was known more for its secrecy and government ties than for public financial performance. He witnessed Palantir's direct listing in the year 2020, which marked its transition to being a publicly traded company. He also watched its sharp stock price decline in late 2022, when investor confidence in the company's long-term growth targets, particularly the goal of sustaining over 30% annual growth, began to waver. During that period, Palantir shares dropped to about $6, leading many to question whether the company's best days were behind it. However, Bracelin now describes Palantir's comeback as a rise from the ashes moment, calling it the rebirth of a company that had once lost momentum but has now become an artificial intelligence standout. This comeback has been powered by renewed growth, strong execution, and increasing relevance in an economy that is rapidly embracing artificial intelligence. Bracelin also makes it clear that the stock is not without risk. He acknowledges that Palantir shares are expensive by most valuation standards and that investors need to be aware of the inherent uncertainty that comes with such a high-growth company. However, he also believes that Palantir offers something unique in today's market. He refers to it as having a one-of-a-kind combination of rapid growth and strong margins. In his view, this combination could enable the company to reach $24 billion in annual revenue by the year 2032. This outcome, according to Bracelin, depends on Palantir continuing to expand across both the national defense industry and the enterprise software space. These are not small markets. Each is valued at more than $1 trillion, offering Palantir ample room to scale if it can maintain its current trajectory. Digging deeper into Palantir's government business, Bracelin projects that it could generate more than $10 billion in annual revenue by the year 2030. This bold projection is based on a compound annual growth rate of 36%, which is not without precedent. Since the year 2018, Palantir has delivered a consistent compound annual growth rate of 35%. This level of consistency is rare in the government technology space and reflects the company's ability to win contract after contract. Recent deals with major government agencies, such as the Army, the Department of Defense, and Fannie Mae, show that Palantir's software is increasingly seen as mission critical. On top of this, Bracelin notes broader structural shifts in government spending. There is a growing focus on artificial intelligence-powered tools that enhance decision-making and operational efficiency, which plays directly to Palantir's strengths. He also points to evolving relationships with established defense contractors. Rather than competing with these firms, Palantir is now forming alliances with them. These partnerships could lead to even greater access to long-term government projects, allowing Palantir to deepen its presence in the public sector. Palantir's growth story does not end with government contracts. In fact, Bracelin believes the company's commercial operations within the United States are on the verge of a major breakthrough. He sees the potential for revenue in this segment to exceed $5 billion by the year 2030, driven by by a compound annual growth rate of 33%. This expansion is being fueled by strategic partnerships with some of the biggest names in enterprise technology, including Accenture, Databricks, and SAP. These collaborations are helping Palantir introduce its software to a much wider audience across multiple industries. The company is steadily expanding into fields such as finance, manufacturing, and healthcare. As more businesses recognize the value of Palantir's artificial intelligence solutions, demand is expected to grow rapidly. However, even the most optimistic forecasts must be tempered by a realistic understanding of valuation. Palantir's enterprise value to free cash flow ratio is projected to be above 200 times based on estimates for the year 2026. This is an unusually high figure and can be a source of concern for investors who are sensitive to valuation metrics. A multiple this high suggests that a great deal of future growth is already priced into the stock, leaving less room for error. Braceland maintains that Palantir's financial profile is in a category of its own. He argues that the company's ability to consistently deliver both rapid growth and high margins is extremely rare. If more organizations adopt its artificial intelligence platforms, he believes the goal of sustaining over 30% compound annual growth alongside free cash flow margins of more than 40% becomes increasingly attainable. This kind of performance would put Palantir in a league that few other companies can match. In summary, Braceland believes Palantir is one of the standout companies in the artificial intelligence sector and refers to it as a long-term winner in a field full of competition. He has initiated coverage on the stock with a rating that suggests it is likely to outperform, and he set a price target of $170. While this represents only a modest gain of about 7% from current trading levels, it still places his target well above the average on Wall Street. It is important to note, however, that the broader analyst community remains cautious. Currently, Palantir holds a neutral rating overall, based on 10 neutral ratings, 4 positive ratings, and 3 negative ratings. The average price target across these analysts is $109.50. This average suggests a potential downside of roughly 31% over the next year. So while there are analysts like Braceland who see tremendous potential in Palantir, especially with its momentum in artificial intelligence and strategic partnerships, others remain wary due to the stock's high valuation and uncertain future earnings path. As always, investors should consider both the opportunities and the risks before making a decision. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.